been big focus for the last couple of years anyways, which is around the Fed and the replacement of Fed Chair Powell, who will now be officially Kevin Warsh moving forward. Afternoon, we have a bit of a surprise in terms of producer price index, and then the new Fed chairman has been announced. So we're going to cover a little bit of expectations of what we see there. I'm Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue, and our goal is to leave you feeling more empowered after each of these weekly updates. And this week we got, again, quite a bit. We have inflation, we have jobs week, we have Google earnings adding to some of the big tech side of things. And then we also, on Friday, learned who the next Fed chairman is going to be. And so we'll talk a little bit about that as well. So let's kind of go in order here. So first off, let's talk a little about producer price index. So this is, again, PPI, producer price index, which came out the other day. Basically showed up 0.5% for the headline number and core up 0.4%. Both of these were above expectations, which I believe was around 0.3 in general. And this brings the year over year to 3 and 3.5% respectively. So again, a bit of a surprise to the upside on producer price index for this month's reading. It'll be very interesting to see how this continues, because if this continues higher, we could see that start to flow down to the CPI numbers as well. And so very important to continue to watch this as we see what this translates to, especially as we wrap up talking about the Fed's path ahead. This week, we also start off jobs week. So we had job openings come out, which were way down to 6.5 million. We talk about inflation and jobs a lot as we talk about the Fed, and both of these data points are going to be very, very relevant in terms of how we look at things moving forward. But again, job openings down to 6.5 million. And then the ADP employment report came out yesterday, shows that we added 22,000 jobs versus 45,000 expected. Now, again, just keep in mind, these reports can be a little bit tricky. The ADP employment report often comes out first before the employment report that we'll get tomorrow on Friday. So we'll continue to watch that to get maybe a better glimpse of how this might all translate. But nonetheless, ADP employment report shows that we added 22,000 jobs versus the 45,000 expected. The other thing I want to touch on briefly is this general story of the slide in tech here this week. And I want to really focus on Google's earnings to maybe tell that story a little bit. Google earnings came out yesterday after the close. They beat on revenue and earnings. Cloud momentum was a huge bright spot. And basically, even with that, the stock is down a bit today. I think in general, we might see it recover, but generally it's down today. And part of the reason for that is because of this CapEx expenditure that they had introduced. They expect nearly double what they spent in 2025 for 2026, which is just, these are giant numbers, as you might imagine as well. So we're seeing, this general theme. If you caught last week's update, or if you haven't, be sure to take a look at that. We talked about this idea of CapEx in technology and especially AI more specifically. And the story continues to pick up a little more steam. So definitely something to keep an eye on, and how that translates to potentially valuation multiples, earnings, you name it. So we'll continue to keep an eye on that as well. Before we get to our question of the week, we have, be sure to tune in next week because we have quite a bit coming up as well. We have the employment report tomorrow, we get retail sales, and we get CPI. So a lot to cover there next week, as well as the Seahawks and Super Bowl. So we'll see, hopefully we'll have a win to celebrate as well. But before we break, a great question of the week, which is really a big story as we get a little further into 2026, but has obviously been big focus for the last couple of years anyways, which is around the Fed and the replacement of Fed Chair Powell, who will now be officially Kevin Warsh moving forward. What I want to share is the question is generally what that means in terms of expectations moving forward. I would share that our perspective is that we still are expecting 225 basis point cuts through the year. Now, even before any change in Fed chair, just keep in mind this is open for movement, because in general, at least historically, the Fed has been, adapting to data as it comes in. I expect that still to be the case. So again, that is the expectations now, but as the year unfolds, it may shift. And in fact, some of the PPI and jobs numbers we got today absolutely could start to shift that perspective from the Fed. But I think that, what I want to share here is this is generally market consensus as well. This is our perspective, but the reason I want to talk about this is because I want to highlight or maybe act as a reminder that the Fed decisions are not made up by one person. The Fed is a committee, and they vote on what to do for these rate changes. Now, that said, I'll be very clear that the Fed chair does have a lot of influence on that committee. But again, each member does have a vote. And so, although this could shape a little bit of those discussions and where things go, the reality is that I think that, because it is by committee, it's unlikely to have this giant shift in how things are going to be addressed moving forward, or at least that's my hopes, I should say, as well. That said, I think that what we could absolutely see is more dissents in the future, which basically means more members voting against the committee or different perspectives on where rates should go. So that's what I would kind of keep an eye out for, which also may give us a better glimpse, honestly, into how the Fed's thinking and where they're looking. But again, it doesn't necessarily change our perspective on what to expect directly from the Fed rate cut cycle moving forward. And obviously, this is going to be a big focus here as we get further into the year. So we'll continue to keep you posted on this as well. In the meantime, have a great upcoming weekend. We'll see you next Thursday. Go Seahawks this weekend, and be sure to tune in next week where we'll cover again employment report, retail sales, and CPI.